Hey, it's Jason Coleman, mortgage broker with Price Mortgage, and today we're going to go over a few things about the housing market and what's happening right now. So in last week we saw 175 bit destruction in mortgage rates, and today, which is Monday, we got hit with almost 100 bips. Now, if you don't know what bips are, 100 bips is equal to about 1%. So if I was doing a $400,000 mortgage and I quoted you a 5% interest rate for no cost, well, then 100 bips would mean that it's going to cost you $4,000 more to get that same rate. So we might have to bump it up, 5.25. Well, we've just now hit 6%. And 6% is for the 740 FICO, 20% down, perfect scenario. So let's just look at the average credit score for nationwide is around 680. So the pricing is different on interest rates for that 680 borrower than it is for the 740 borrower. And that pricing may be in the mid sixes now or the high sixes. If you're doing a cash out and you have a 660 FICO, you're probably closer to 7% right now. That's pretty big. So why would a commission-only person like myself be telling you this potentially, pessimistic information? Well, it's because I want to keep it real with my people. I don't really consider myself an influencer, but the people that do watch me, I want you to be informed and see what's coming down the road. So I think we're at the lowest savings rate we've been at in a long time. The Fed's stimulating the economy is over. Now they're doing what's called quantitative tightening, and that starts this week. They stopped buying $120 billion of mortgage-backed securities, and now they're going to try and offload their balance sheet. And what that's going to mean is a lot of pain. This free money is over. And so a lot of margin calls happening in the stock market and in crypto, a lot of over-leveraged investors. And as a real estate investor, looking for a deal that's going to cash flow, it's going to be very difficult with these prices and these interest rates combined. So if you're a big hedge fund or whatnot, I think you're buying and you're holding long term, right? I think that's the overall plan. But they say with every 1% rise in interest rates, there's a 10% correction in pricing. So in the last 12 months, we've gone from 3% now to just over 6% here. We'll be seeing this shortly. I mean, it'll be coming to the news. You'll be seeing, if you go look it up, you're going to be seeing interest rates are above 6% across the board. You go to Chase or whatever, you're going to find that out. So I'm not sure why there's some other professionals saying that interest rates have no impact on housing prices. It's just supply, only supply. Well, let's go look at some of the things that are relative from 2008 to today. So back in 2008, we had the highest home prices ever. We hit an all-time high. And guess what? In 2022, we've hit the all-time highest prices ever in real estate. It just doesn't make any sense for 90% of the income earners out there. Yeah, the 10%, you'll still be selling homes. Homes are still going to move, but I think transactions are going to be coming way down. I think they're going to go from like 8,000 a month down to 5,000 a month. It's going to put a lot of agents and loan officers on notice. So I think that every time you talk to somebody like myself who is 100% commission, or a real estate agent that's 100% commission, you have to take with a grain of salt whatever they're saying and do your own homework. And you may need to buy a house for your family because shelter is a necessity, right? You just may need to do that. But you got to be kind of leery of where that's going to go. If you had to do a job change or there was a medical emergency and you needed to sell that home and you bought at the peak and you only put 3% down, you could be in some trouble, financial trouble. So, if you use down payment assistance in 2021 or something like that, and something shifts, like you lose your job and you got to sell your house, there are layoffs. If you go search Google for layoffs, you're going to see the amount of companies laying off right now. And the mortgage industry is a leading financial indicator, whereas real estate is a lagging. So if you look at previous home sales, you're going to see these prices, you're going to see whatever, but real estate doesn't catch up for 6 to 12 months to what actually happened in the stock market. And if you follow the chart of the stock market, real estate does follow pretty closely to what the stocks are doing. And if you go look at the stock market right now, we're down over 20% in the stock market. I'm not even going to go where crypto has gone because I'm personally getting hammered right now. So we had the highest home prices in 2008 and 2022. Guess what was also the highest? Gas. Gas was $4 a gallon in 2008. All-time high. Guess where we're at right now? All-time high in gas prices. And we're at the highest interest rate since 2008. Again, more similarities between 2008 and 2022. So I see one other loan officer, my friend Raman, I'm going to call you out. Why do people try and time the market? Well, it's called wealth building, okay? And if you buy a stock at the peak of the stock market and it comes down, how many years are you going to have to wait to just break even? So wouldn't it be better to time the market a bit? I mean, I'm not saying like wait for the very, very, very bottom, but I'm saying that the affordability factor isn't there. The affordability factor isn't there. And that's what's been left out of this equation for the past few years is affordability. We had 3% interest rates or lower or somewhere around there. And so that kind of justified being able to pay those higher prices because the payment that's what most people buy off of is payment. They don't really buy off of, anything else if they can't afford the payment. So just did a quick rundown of 85304. And I said, Aaron, there's like, I don't know, let's go see what 85304 in Phoenix. I say that because that was our starter home. That was where we bought at $99,000. And I'm going to see here, 85304. How many homes for sale? There are, ranging from $399 to $875. There are 32 listings in that 6 square miles. So I said, Aaron, how many homes are there for rent, 3-bedroom, 2-bathroom? And he said, there's 5. Well, that's not very many, but they range from $2,500 down to $2,300. In 85027, you can get from $1,800 up to, I think it was $2,800. So now that rates are over 6, the monthly purchase for a $450,000, you say you put 3 or 5% down and you got a $430 mortgage, well, that payment is now about $3,000. So it is hard to get into a rental. We all know this, but the cost of renting is now lower in many cases than it is to purchase. And that's why we've seen a 78% decline in buyer demand. So it's not that buyers don't want to buy, and it's not that they don't want to own, it's that they can't qualify. And 90% of these people cannot qualify. And that's why I think we're going to see a lot of inventory come into the market. So if you're an agent, you have to really be careful of who you're working with. Do these sellers really need to sell, or are they just trying to get top dollar? And if they're just trying to get top dollar and aren't going to move, they aren't going to sign the contract if they're not getting top dollar, then you may be wasting a lot of time and a lot of your money on the listing. So be careful out there. I know you agents spend a lot of money, taking pictures and a lot of time and helping with staging. And some of you out there are even painting and, doing lawn work for your customers. I know how hard you work. So that's what today's video is all about. Is the cost of rent versus owning it's changing. Will we see more rental supply come to the market? I think we will. I think some of these Airbnbs are going to see where the economy is going, and I'm seeing a lot of spending different, like people will go on their vacations, but that's all they're going to do. They have stopped driving as much. They're looking at their food costs. They're looking at these other costs that are impacting their day-to-day lives, and they're being more careful. So I think we're already in a recession, and I think it's about to get worse. I would love to talk to you about purchasing a home or refinancing if it makes sense. If it makes sense, let's go over the numbers and see if you're able to still afford a vacation after you have this payment. See if you're still able to get a car payment, because you need to be able to get places. I don't think this energy crisis is going away anytime soon. I think gas is going to continue to go up. I think by fall, we're going to see 40% higher food prices. I think gas is going to be even higher. I think we could see $7 a gallon here in Phoenix. That's just brutal. So anyways, I love to talk to you. I hate to, be cutting my own head off here because I am 100% commission and don't make any money unless I'm closing deals, right? But I want to do it the right way. I don't want anybody to get hurt in this ever-changing scenario. What I think, Mike, I don't think there's any room for the feds to come back in and stimulate again. I just don't. I just think they're done and they have to do what they got to do no matter how much pain it brings us. Thanks for watching and I appreciate your time. See you next time.